Thanks for doing the interview, Chris. Typically, who are the people that trade in New Zealand?
The typical trader is potentially probably in their 50s or 60s, mostly male-dominated industry. We have seen a rise in the female trader. About 15% of our traders are female, the remainder are male. It's kind of diversified across the country. I mean, Asian business is obviously very strong for us as well. We have opened an office in China recently as well as a global business, but even locally we have seen the rise of the Chinese migrant trader joining us. All of our clients are based in New Zealand and live in New Zealand. But business has been pretty much the same over 12 years in terms of the type of trader. They're early adopters, they like technology, they like to be self-directed, and they like to make the decisions themselves on the markets. And risk profile is the most important thing. What is their risk profile? And that comes down to how they will make investment decisions in all markets, in all products, in all asset classes.
There are thousands of products that people can trade. What are the most popular ones here?
Majority do trade the top 10 currency pairs. They are the most liquid. We see the most activity in them globally. As we know, FX is a $5 trillion a day market. So New Zealand dollar people are very obsessed with in New Zealand. We've seen some big movements, which is largely why we do see a lot of trading in the New Zealand dollar. People are drawn into taking a view on where the New Zealand dollar is going. We've had elections recently, which has certainly moved the currency lower. New Zealand dollar has fallen 7 cents since July last year, and we've seen some big moves against the pound, which is certainly of interest after Brexit. But gold is popular, oil is popular, the S&P 500, the Dow Jones. Almost any major market that moves attracts traders, because traders are looking for movement, opportunity, and most importantly, liquidity. They want to easily be able to buy and sell a position, whether that is a short-term position or a long-term position. But not so much small cap stocks and small companies, it's mainly the bigger FX and commodity products.
What are the most common mistakes that traders make?
Managing your risk. A professional trader will manage his risk and manages his capital and his downside risk in any investment, whether it's property or physical shares or foreign exchange or commodities, before taking a position. So they'll manage that risk, being very disciplined, managing your emotions, having realistic expectations. Some traders will come in and think they're going to double their account value overnight, which is unrealistic. And you see that with the rise of Bitcoin and the huge speculation going on there, which is a concern for someone who's never bought or sold a share in their life. They will learn a lesson based on that speculation that's going on in that market. And the professional trader will have a strategy, they'll have a plan, they'll treat it like a business. They will take the losses with the gains. They know that they can put the odds in their favour by doing analysis, whether we have charting type clients or fundamental type clients who may look at a company, they are buying on fundamental reasons and they want to hold that company. No different to physical shares, where you're purchasing physical shares and you're investing in that company for the long term. But it does require a lot of work, a lot of discipline.
Looking back on 2017, what has stood out to you in the markets?
The incredible rally of the Dow and that continual rally under Trump has been something that pre-Trump being elected this time last year, no one would have predicted. But he's still managed to get through potentially tax reform, which is a huge benefit to businesses, which has been well overdue in America. So that's been a massive standout. The US dollar weakness. The US dollar was hugely weak this year. Almost a 10% move in the US dollar is a huge move, and it's the most traded currency in the world. I mean, every year there's different things. So oil was the year before. Some people thought it might go to $10, and there's crazy predictions all the time. This year's really been about interest rates being still so low, emergency levels, you could argue. The Fed unwinding its balance sheet, starting to unwind its balance sheet, which we know is so big that they're going to struggle to unwind that. But they've managed to do that while keeping the market calm and driven by a lot of passive inflow of money, the passive money coming into the market, and it's been an incredible rally, and a lot of our clients are short that market. People, and not our clients, but a lot of people are bearish and they want the market to fall and have a correction. And we've had the longest period of no volatility or low volatility.
And looking forward to 2018, what should people be looking out for? I guess be careful of all the predictions that are going to come out over the next 2 or 3 months, because no one knows what the direction will be. And we've seen that over and over again, that how bad the predictions can be, and listening to a headline coming across CNBC can be very damaging for your portfolio. Stick to what is the trend doing? Has the market actually told you that it's actually falling over, and this is a real correction? We are overdue for a correction, which no one can dispute that. But what will the tax reform do? What will GDP growth in America go through 4%? Can the New Zealand market continue to deliver the returns it has done on the stock market? And what happens if the Fed raises rates 4 times next year? Where does that put the New Zealand interest rate for our offshore funding? Where does that put the New Zealand dollar? You'd have to think the RBNZ has to raise rates next year, much earlier than anticipated, if the Fed raises what the market is expecting.